Good morning. It's Sunday, January 29, 2023. This is my presentation for the Vancouver Resource Investment Conference Gold Chart Journey into the Yukon. Disclaimer, usual disclaimer, forward-looking statements. I may discuss some stocks that I actually own. This is not investment advice, purely for entertainment purposes, and consult a licensed investment professional before making any investment decisions. Going into gold. So gold has had a very nice move in the last few months. Q3 2022 was a record high for central bank gold purchases. You can see that central banks are consistent buyers of gold over the last decade or so. It's very, very rare that central banks are net sellers of gold. They continue to accumulate. And Q3 2022, second half of 2022, was driven by China buying gold. Chinese central bank really accelerated their gold purchases in the second half of last year. You can see right here this big move up in gold accumulation. There's a lot of things that we don't see that China does, including hoarding their own mine production. But simply put, central banks buy gold, not silver. So that's one of the things that a lot of people have made note of recently, that silver has been lagging, stuck around $24 an ounce, while gold has moved above 1900. Well, central banks don't buy silver. So silver has to be driven by either retail investors, hedge funds, or industrial demand. This is a really interesting slide because we have seen the 2-year note yield move under the Fed funds rate. In fact, it happened on January 11th. The Fed hiked to 4.5%. The 2 years at about 4.2%. So we are inverted across the yield curve. All maturities are now inverted, submerged under the Fed funds rate, and this has a very strong track record of leading to gold price appreciation. So far, since the inversion happened on January 11th, gold's up about 2%. The average move is 15%, and we saw this happen in April 2019. We saw it happen in the summer of 2006. And we saw it happen in the summer of 2000. And what's interesting is that all of these instances, these last three, 2000, 2006, and 2019, a recession was less than a year away, was very nearby. And inverted yield curves very often are leading a recession. So this is the 2s, 10s inversion, which started in July. So we've been inverted 2s, 10s. So the 10-year yield has been under the 2-year yield for more than 6 months. This is a very, very deep inversion. And usually the recession takes hold, within about a year of the inversion. A very strong leading indicator. So if a recession is coming and the bond market is telling us that the Fed is too tight, well, we're getting very close to a pause. And that's one of the drivers of the recent move in gold. Another one is de-dollarization of the global economy. So Russia, India, China, Saudi Arabia, all of these countries are getting off of the dollar. And we saw a big announcement by Saudi Arabia that they would accept payment in other currencies for their oil, not only in dollars. This is a big moment. And Zoltan Pozsar mentions that investors need to now use a 20-40-20-20 portfolio with 20% commodities, and gold bars is one of those commodities that you should hold in a portfolio. So this is a major sea change, paradigm shift in how portfolio managers allocate, and it's a paradigm shift in how the world works. The fact that the world is bifurcating between east and west, and the dollar is on its way to being dethroned, and that's very positive for gold, because in many ways gold is the anti-dollar. Technically, gold put in a triple bottom September, October, November of last year. This was a very, very powerful triple bottom that had a lot of fear, a lot of over bearish sentiment extremes, and yet gold couldn't really break under 1620. So there was a buyer that kept stepping in there and held that support level. That was a major capitulation washout, and we've had a very, very nice move off that. I believe that was a major turning point in the gold market. And you can see that the correlations are pretty powerful. Gold has a negative correlation to the US dollar, about 91% right now. Gold has a negative correlation to the 10-year Treasury note yield. So when yields rise, gold falls. When yields fall, gold rises. When the dollar falls, gold rises in dollar terms. When the dollar rises, gold sells off in dollar terms. And so that sort of brings us to the monthly chart, bigger picture. There's some very positive signs starting to form here, including you can see relative strength breaking out above this downtrend drawn from the August 2020 and March 2020 peaks. And the MACD is about to cross positive. The last time the MACD had a positive cross similar to this one was in the first half of 2019. And obviously that led to a tremendous, tremendous move over the next year or so. If the MACD does cross into bullish territory, that's just more confirmation that this is a confirmed uptrend. Obviously, we need to see a monthly close above 1985, and really the 2000 level is obviously a big psychological level. I think that once gold confirms a move above 2000 by either a weekly or even better yet, a monthly close, that will bring in a whole lot more generalist capital into precious metals and the mining sector. One of the things I said at the end of last year was I thought that there was a good chance that gold would make a new all-time high above 2100 this year. I still stick by that, although obviously I don't think we're going to go up in a straight line. And actually, we're going to talk a little bit about what could derail it in the near term. I think that the market is expecting a pause from the Fed within the next few months. I said few because February, March, April. It's probably going to happen in March, but I don't know. And that's the expectation, though. That's the problem, though, because it's more of a consensus view now. So if the Fed decides to stay tighter for longer, if they hike above 5% on the Fed funds rate, that could serve to flatten the yield curve at a higher yield level, which will likely be bullish for the US dollar and negative for gold. That's a risk for sure. Right now, the Treasury yield curve is deeply inverted across all maturities, and markets are behaving as if a pause is coming. The biggest risk to gold and other anti-dollar assets in the near term is that all the good news from the Fed has been priced in. And it's like we're potentially lining up for a sell on the news once the pause is official. And then obviously, just from a technical level, the $1950 to $2,000 zone is a big layer of resistance. But it's also an obvious layer of resistance that everybody can see, everybody's looking at. It's causing a lot of people to be cautious. The obvious usually doesn't work in markets. Also, sentiment is bullish, but not frothy. Um, like I did this Twitter poll, and it's still going, but over 200 votes. Generally, people who follow me would be positive on gold. And basically, it's 50-50 whether we're going to touch 1850 first or 2000 first. I wouldn't consider that to be frothy sentiment at all. I mean, if this poll came in at 75% we're going to 2000, then that would be a little concerning. There's plenty of people skeptical of this gold move, plenty of people calling for a correction. Um, Bull markets climb a wall of worry, right? This is not the kind of sentiment that I remember from August 2011 or August 2020 that led to a major peak. So we talk about gold. Obviously, we're all here because we're bullish on gold. We want to make some money from a gold bull market. And so the natural segue is to what does a gold bull market mean for the Yukon, for mining companies, for junior mining. And, simply put, the Yukon used to be thought of as this faraway place that was a money pit for exploration and mining companies. But a lot has changed. Major technological advancements and infrastructure improvements, as well as a pro-mining environment, have helped to create some major gold discoveries in the Yukon over the last several years. Simply put, the Yukon does it different. Breathtaking geological endowment, one of the final gold frontiers on the planet. I mean, there's just not that many places on Earth where you can find high-grade gold at scale, at tremendous scale. A lot of underexplored or even completely unexplored, untested areas of the Yukon. There's a lot of metal in the ground to be found. Supportive territorial government. It's one of those places where companies and even investors can meet with government officials very easily, and they're supportive and they're engaged. Win-win attitude for all stakeholders. It's just the Yukon does it different. It's a smaller population. Obviously, it's a very small territory in terms of the number of people who live there, very big geographically, but there's a win-win attitude that permeates the Yukon, and everybody is supportive of everyone else. And obviously, companies are very engaged and consult with First Nations throughout project advancement. And the best part, a trend of recent successes in shareholder value creation. So there's nothing like making investors money to bring in more money. Transformative returns by Yukon companies in recent years. Snowline Gold plus 1,600%, Banyan Gold plus 1,500%, Western Copper 500%, Fireweed Metals plus 300%. Now, obviously, I chose these mostly from the March 2020 COVID crash lows to recent highs in the last couple of years. Obviously, those are not representative returns, but they are an example of what's possible if you catch things just right. Exploration success generates value, and Snowline is maybe the best example of that. This is a stock that went from near 20 cents a share to almost $4 a share in the span of less than 2 years. So this is a tremendous win, world-class gold discovery at the Rogue project, including a drill intersection grading 2.3 grams per ton over 282.9 meters. Banyan Gold. This is one that I know and love. At the March COVID crash lows or the final weeks of 2018, this was trading at 3 or 4 cents a share. Traded well above 50 cents last year at the peak. Currently trading at 48 cents. This is a company that has advanced to being on the brink of producing a 6 to 7 million ounce resource update for the Ormac project. Drilling is going to get underway again in February with 4 rigs. Um, yeah, this has been a tremendous story for Yukon, an example of what good management and good exploration can do. So we know that there's a seasonal tendency in the sector where the stocks tend to put in a low sometime around March or April, then they tend to rise throughout the summer as drilling gets underway and the anticipation of of results begins to build. So we're not at the sweet spot yet, but we're coming up to it. And these are 4 ideas for that seasonal trade: white gold, strong shareholder base, uh, a new discovery at the Betty Ford target near Newmont's Coffee deposit, $68 million market cap. Agnico Eagle owns 20%. Eagle Plains Resources, they have a royalty, Ormac royalty, that will be spun out into a new royalty company in Q2. And they're drilling at their own project, the Vulcan SEDEX project, starting in June. $24 million market cap with $10 million in cash. So the risk here is pretty minimal. Fireweed Metals, world-class deposit, tons of cash in the treasury, and you got a bunch of catalysts here in 2023, including an updated global resource and PEA. And Victoria Gold, 650 million market cap, and on track to produce 200,000 ounces of gold annually, largest gold mine in Yukon history. So some charts, just quickly flip through the charts. White gold put in a double bottom at the end of last year at around 31 cents. It started to move up. Seems like it's in the process of a stair step higher. This would be a good candidate for that seasonal trade. Eagle Plains, again, you're going to get this royalty spin out probably around May or June of this year, plus the drilling starting at Vulcan. This is a very nice chart. Seems like a pretty low risk proposition. Fireweed Metals, consolidating after a big move. Would like to see it consolidate a little more, maybe for the month of February, and then it could be really ripe for a trade into that seasonal, that seasonal trade with a catalyst-rich year ahead of it. And then finally, Victoria, another double bottom for another chart pattern double bottom around 650 a share. At the end of last year, and it's moved up very nicely. Big support level around 850. It's obviously moved above $10, gotten a little overbought, but gives you a lot of gold leverage, a lot of leverage to the gold price. I mean, basically, since the end of last year, it's moved up almost 50%, as gold has moved up about 5 or 6%. So it gives you a lot of leverage to the gold price, but obviously that leverage can cut both ways. And that's all for me. Thanks a lot for your time.